It is a historic moment. They've raised interest rates more in one go than they have done for more than 3 decades. There was a brief moment in 1992 where they raised them by a little bit more than this. It only lasted 24 hours. So really, this is the single biggest increase that we've had since 1989. It is a big moment. Obviously, they've been raising rates quite quickly in recent months as well. Now up to 3%. That will have an instant bearing. If you have a floating rate mortgage, it'll have an instant bearing on your mortgage. And of course, it will also have a bearing on many other kind of borrowing costs across the economy. But yes, as you say, Anna, there are all sorts of other things going on as well, because the bank doesn't just provide their decision on interest rates, they also give us a sense of how the economy is doing right now. I'm afraid the story there isn't especially good. They say that we are already in recession right now. The recession has already begun in the third quarter of the year, and it could well, and I'm just saying this to couch it slightly, it could well last a long time, maybe as long as 4 quarters of successive contraction. And when we're talking about recession, what does it mean? It means the economy, gross domestic product, basically shrinking. And the technical definition of a recession is just when it's shrinking for 2 quarters in a row. But in broad terms, it means we are not in a good place. The total amount, the sum total of income we're generating across the economy is shrinking. They say it could be a very long, very protracted recession indeed. But there's a massive proviso over that, which is that they're concerned that right now markets, and when we're talking about markets, we're all pretty familiar with this now from the last few weeks, money markets out there, gilt markets, the markets where people are making decisions about whether they're buying into the UK, what they're doing with UK government debt. They say they are expecting higher interest rates than really look likely. They've given a really firm signal, firmer than I can remember in a long time, to suggest that while markets at the moment think the rates could be heading up towards about 5%, the bank signals that's not necessarily likely. So in a paradoxical way, although they're raising rates by 0.75%, that's a big amount, they're saying the eventual peak in interest rates might not be as high as a lot of people had expected, which could, of course, have a bearing on what we're seeing in markets at the moment. It could mean that fixed rate mortgages, which of course are based on those expectations, could actually start to go down a little bit in response to this. But really, we have to wait and see. We have to see how markets react, and I'll have a look at, I mean, I literally haven't looked at that since I came up from the vaults to get that analysis. But we'll also see what the governor has to say. So we'll be hearing from the governor, Andrew Bailey, in a press conference, and we'll be talking to him on Sky News a little bit later on as well. But yes, a big day for the UK economy. Interest rates rising faster than we've seen in any previous decision from the Bank of England in 3 decades, getting up to 3%. And it essentially diagnoses that we are already in a recession that could really be quite protracted.
And did they say anything about where inflation would peak?
So their expectation is inflation is kind of more or less going to peak kind of round about now. So you've got that moment in October when we get that increase in energy prices. The energy price guarantee, of course, meaning it's going to be £2,500 on average for households. That's about 11% inflation they're expecting around now. But then it stays pretty high. And a lot depends, to be honest with you, and they don't really know about this either. It depends on what the government does in April, when that 6 months comes to an end, and when it basically decides what it's going to do with energy prices in future. We don't know about that yet. And the other big thing, actually, that the bank doesn't know about, and it's another reason to be a little bit cautious. I mean, there is no getting away from these numbers. They do not look good. The economy in recession right now, potentially, it could be quite a protracted recession, although it's worth saying, you know, when we're talking about the length of the recession, that's a length of time. The depth of the recession, so how far it goes down, how much of a dent it's making in all of our incomes across the economy, that's not as bad, according to their forecasts. Even in those kind of quite gloomy forecasts, that's not as bad as we saw in 2008. It's not as bad as we saw in the 1980s. It's kind of comparable with what we saw in the 1990s. But you've got these other factors. You've got high inflation, which, of course, you mentioned. You've got high energy prices, which are a part of that, in fact, a big part of that. And then you've got higher mortgage costs. And that's obviously what we've just had formalised in the Bank of England today, bringing up those mortgage costs for households across the country. And you're facing that kind of 3 different factors coming at you from all different sides, which means that the amount of kind of spare income that people have over the course of the next few years won't be as much. And that's what's pushing the UK into this recession right now. Of course, we will hear as well from the Chancellor, Jeremy Hunt, about what their plans are. I mean, you know, they have their autumn statement coming up. They're unlikely to give any kind of hints about what they're going to do. But it's worth saying what this has done is laid out a pretty bleak outlook for the UK economy ahead of that decision. And of course, if they are going to be cutting spending, raising taxes on top of all of this, that might well mean that the dip for the economy is even worse in the coming years. So it's pretty tough times. A couple of other things I should mention. Unemployment the bank talking about unemployment getting up to a peak of around 6.5%, maybe even higher than that. That would be the highest that we've seen since the financial crisis. Of course, it was kind of up at 8% or so during the financial crisis. And the other issue is mortgages. They think that on average, if you've got a mortgage, then your costs, obviously it all depends on when you're refixing, but your costs could go up on average by about £3,000. That's an average figure, but £3,000. Now, bear in mind that that is actually bigger than any kind of compensation that households are getting, those who have mortgages, from the energy price guarantee. You see the issue. You've got energy prices really high. At the same time, those mortgage costs coming up as well. And the bank's saying in order to get inflation down, it's having to raise interest rates right now, which is making life tougher for everyone. So unfortunately, there's bits of news that aren't especially palatable there.